According to supply managers in the 9 Mid-America states, how is the economy performing?
The overall index was down to 54.3 from April's 55.9, and this is the second straight monthly decline, but it is still the 30th month that the index has been above growth neutral. So it was good news, but it has been better, and I'm expecting positive but slower growth in the weeks and months ahead.
What is causing the index to decline?
Two really important factors, and both negative, is the floods, the negative impact of flooding in this part of the country, and secondly, the trade impacts. That would be tariffs and trade restrictions. And we ask about that, and those restrictions. Almost two-thirds, 62.2% indicated that the tariffs were making it more difficult to purchase from abroad. So that's not good news. The impact of tariffs. 57.8 reported making inputs more expensive, so that's increasing the cost of buying from abroad. 13.3 reported forcing their company to switch to other suppliers. Of course, that would be non-Chinese suppliers. And 1/4, that's 25%, said that the tariffs were forcing their company to advance their purchases, that is, buy today before the tariffs go into effect later on. And of course, the Trump administration has threatened even higher tariffs in the months ahead.
What were the hiring trends for April?
When you look at job growth in this part of the country, you talk about year over year, that's from May to May. We're talking about 0.9% for the region, double that for the U.S., that's 1.8%. When you look at the last 3 months, it's flat. It's been flat for the region, or for the 9 states collectively. In other words, no job growth over the last 3 months, and that's compared to the U.S. of 1.5%. So the numbers aren't looking good, and if I can bring up my chart, you can see the overall trend. Now, this is not just jobs. This is all the components of the overall index. You'll see that the index has declined over the last couple of months, and you see there compared to the red, that's the red number. The blue number is the Mid-American region. The red number is the U.S. The number for the U.S. will come out later on this morning. It's a very important number. I expect it to be down. If it's down below growth neutral, it's not going to be a good day for the stock market.
What inflation trends are you noticing?
They're down, believe it or not, even with higher tariffs, and that's surprising. Our inflation number is 62 for the month of May, 62.8 compared to April's 67.5. And what that's doing is I think the Fed's next move is going to be reduce the interest rates. And of course, that's good for borrowers, but it's a signal this economy is slowing down, and slowing down more than the Fed would like to see, and it's slowing down with lower inflationary pressures and with lower interest rates now. And if you want to keep an eye on that, watch out for the yield curve. That's the difference between the 10-year and short-term interest rates 2-year, which is what I look at. That's about 18 basis points, 0.18%, way too low. Indicates that the probability of a recession, and that would be, in my judgment, first quarter of 2020, has risen dramatically. It's still probably somewhat less than 50%, but that's double what it was, say, a year ago.
What are some areas of risk that we need to be aware of?
The monthly survey of national supply managers, if that number, and it's been trending downward, moves below growth neutral, not good. That would be a harbinger of really it'd be a tough day for the equity markets, stock markets. Also on June the 7th, of course, that's this Friday, that's the BLS jobs report. If that number is very weak, that's going to be a concern. Now, what's weak? Below 100,000. Getting it below 75,000, obviously less good. Below 50,000, even less. So that number, if it's above 150,000, that's still a Goldilocks number, and not too hot and not too strong. Look at the wage number as well. Above 3.5% to 3.7% year-over-year job wage growth. That's a good number. That's, again, Goldilocks, not too hot, not too cold. BLS releases its Consumer Price Index, CPI. That comes out on the 12th. If that number, say, is for the month, 0.2% higher, that's an okay number, especially when we're talking about tariffs. Of course, oil prices now moving down. That's going to take some air out of what little inflation we have now. And I won't say finally, but trade talks with China. Gosh, that's awful. It's so important. and we're dealing with high stakes gambling, high stakes negotiations between, of course, the Chinese and our U.S. team headed up by Lighthizer, and I think the U.S. is driving too hard a line. I'm really concerned about what this does, especially for this part of the country and what it's doing to agriculture. And daily, this is very important, keep an eye on the 10-year yield on the 10-year U.S. Treasury bond. It's easy to find. Go to finance.yahoo.com. 10-year yield is down to 2.2%. This is the lowest in a number of years. Now, what does that indicate? Indicates inflation's down, indicates risk are higher, and it indicates the economy may be slowing down. So if that number moves even lower, that would be a big concern, and I think you have to keep an eye on it.